All right. As we enjoy the soft music in the background, both our speakers are on. Let's hear from my first speaker, Mrs. Adelaide Afiligavu. Ma'am, if you are on, can you say hi?
Hi, Dr. Hammond, and hello,
Oh,
everybody.
great. The audio works perfectly. I want you to try your presentation out so that we don't have any hitches as we just set the ball rolling.
Okay, please, did you give me access to share?
Yes, yes, ma'am, we have it.
Okay. All right, so this should work. Can everyone see my screen?
Yes, we can. Just move on to slideshow, presentation mode.
Yes.
Excellent.
It's in presentation mode.
Yes, we can see that
Yeah.
now. Thank you very much. I think you can just go off and just stop sharing now. Or you just stay on whilst we can set the ball rolling. Colleagues, good afternoon once again. Want to set the ball rolling. Want to invite our chairman of the Central Division, Dr. Med Emmanuel Ofori, to give us the opening prayer, and we'll zoom off. Dr. Ofori, sorry to have just thrown a curveball at you.
It's fine. Thank you, Dr.
Thank you,
Hammond.
sir.
Yes, thank you everyone for joining. We'll share a short prayer. Our Heavenly Father, we thank you for this afternoon, putting this program into your hands. We pray that as we are coming to discuss a very important topic, you'll be with us. Make sure that we're able to assimilate this work properly. To the glory of your name, Jesus Christ, our Lord and Savior. Amen.
Amen.
Amen. Thank you very much, Dr. Emmanuel Ofori. It's a privilege to welcome all of you to today's webinar on basic accounting for doctors and dentists, and also excellence in patient care. And also, thank you everybody for making time to join what I believe is a very practical and necessary conversation this hot Sunday afternoon. As clinicians, we are trained extensively to diagnose, treat, and also care for patients. But in modern healthcare practice, whether in private practice, in group practice, in the government sector, or even leadership roles, healthcare demands more than just clinical competence. Financial literacy and a sound administrative decision making, these are no longer options. They're essential for one, sustainability, efficiency, and ultimately better patient outcomes. At the same time, as we explore the business side of medicine and dentistry, we must always remain grounded in the core of our profession, excellence in patient care. Clinical quality, ethical practice, communication, and patient-centered services remain the pillars upon which trust and professional credibility are built. Today's session is designed to bridge these two critical domains, understanding the fundamentals of accounting relevant to clinical practice and reinforcing the principles that define high quality patient care. All participants are encouraged to engage actively. You have the chat box, you have the QA side to also type in your questions. Let's get interactive. You have a time where we will share all that has been written, share experiences, and also think about how these insights are going to be translated into your daily practice. For we have two excellent speakers who bring both technical expertise and real-world experience to do justice to these topics. And I'm confident that this will be a very valuable and enriching session for all of us. Once again, you are warmly welcome. I want to start with the excellence in patient care that will be delivered by Madame Adelaide Afedle Gavu. She prefers to be called Adele. She is a seasoned human resource professional with over 2 decades of experience in strategic HR management and organizational development. She holds both an MSc and a BSc from Bellevue University from Nebraska. She is a certified professional in HR from the Human Resource Education Institute and a member of the Chartered Institute of Human Resource Management. Throughout her career, Dell has worked directly and through Senadel Consult Limited with organizations across a wide range of industries, including medical services, pharmacy benefit management, renewable energy, pay TV, free-to-air television, radio broadcasting, fast-moving consumer goods, restaurants, logistics, agribusiness. So she has a wide experience. In her role as Group Head of Human Resource for Strategic Initiatives Limited, Adele oversaw HR strategy and operations for companies within the group operating in investment banking, investment management, manufacturing, and e-commerce. Dell is also a registered Greek methodology trainer and facilitator with extensive experience in design and delivering leadership and organizational development programs. Her passion lies in working with small and medium enterprises, supporting them as they grow into strong, high-performing organizations. Beyond her professional work, she's actively involved in church and community service, and she currently serves as the administrator of a church and treasurer of the Rotary Club of Accra West for the 2005-26 Rotary year, and even has been re-elected to serve for the 2026-2027 Rotary year. As the managing consultant of Senadel Consult Limited, Dell is committed to bringing her passion, experience, and strategic insight to every organization she has the opportunity to support. Ladies and gentlemen, kindly let's have a virtual round of applause for our first speaker, Adele Afedle Gavu. Madam, we are all ears.
Thank you, Dr. Hammond. Good afternoon, ladies and gentlemen. Like Dr. Hammond said, please just call me Adele. I prefer that to the Adelaide. And you're welcome to our presentation on excellence in patient care. I hope everyone can see my screen, and we'll just zoom into it. I think we have like 20-25 minutes for this presentation. Dr. Hammond, am I correct?
Let's make it 30 minutes.
30 minutes, okay. So we have 30 minutes for this presentation. And I like that Dr. Hammond had mentioned that it's going to be conversational so that we all have an idea what this is. We're just going to go through it and remind each other of a little bit more details about it. So just let's go with the flow. Just to tell a bit of a story before I delve into it. In the last month, I have been thrown into the healthcare system in Accra. Been going to one of the big hospitals every Monday and Wednesdays for the last 4 weeks, and it's been interesting. It's been interesting, good, and interesting, not so good. So having this opportunity to have this conversation was, should I say, God sent? So let's talk about excellence in patient care. You all are doctors, so clinicals is your skill. We don't doubt you about it, but you have to remember that patient care goes above and beyond clinical care. Because we are human beings, our emotions and feelings are very critical to our healing process and how we feel you are caring for us. So care in the sense of health care or patient care is an experience And experience, we all know, is tied to emotions or feelings. And because it is emotions and feelings, they differ from person to person. Now, let's go back a little bit. Even babies have emotions and feelings and they exhibit it. So how much more we, the adults, that have gone through a lot of life experiences, and we are coming to you in the hospital at our lowest point in life. We're sick. And so when we're coming, the emotion is at its peak, the feeling is at its peak. And we are coming in to dump all this on you, expecting you and your team, your support staff, to do the clinical side as well as the emotion and feeling, the experience side of it. Now, when we say care is an experience and experience emotions and feelings, we are saying that for you to achieve excellence in caring for your patients or excellence in patient care, every member of your staff, and I mean every member, from the one who opens the gate in the morning to the topmost person on your organizational chart, every member of your staff has to consistently deliver quality service that is centered around each and individual patient at every touch point every day. That is a lot to ask from you, but that is the reality. Every one of us is expecting quality service from every member of staff that we meet across or along our journey whilst we are in your facility. And this has to happen every day, which means your staff have to be at the topmost of performance to be able to execute that, because they are humans as well. And they have emotions and feelings as well. And they have good days and bad days. You all have good days and bad days as well. But we are expecting you, as selfish as we are, to put your emotions and feelings aside and provide us with ours. And that is how you are going to achieve excellence in patient care. Now, when we say quality service, we mean service that is accurate, service that is on time, service that is detailed, service that is reliable, compassionate, respectful, empathetic, ethical, and you're doing all this with a very clear communication. It's a lot. It has to be accurate, on time, detailed, reliable, compassionate, respectful, empathetic, ethical, and you have to clearly communicate with us. And each of your staff must understand what quality service means within the context of their job roles and responsibilities. Because everybody's job roles is different, you as the leaders have to find a way to include this quality service, how it is being defined, into their job roles and responsibilities, into their job descriptions. And it should be in a way where you should be able to measure it. I think sometimes, aside from maybe I'm wrong, but aside from the private businesses, private hospitals and dentistries, I believe they will have a way of measuring what I'm talking about. Everything is measurable. Everything can be measured, even feelings and emotions of how your people treat your patients can be measured. And it should be put into their job roles and responsibilities, and it should be measured according to their performance, so that their performance is not just clinical. It also has patient care in there somewhere for them to be measured on to know if they are doing the right thing. Now, why are we doing all this? So we want to ensure that every patient that comes through your facilities receives care that is not only clinically effective, but they receive care that is also respectful, compassionate, and is centered around that individual patient's needs. So we're looking at respect and compassion for each individual patient that comes through your facility every day. Let's talk about respect. Respect in this context, what I mean is, yeah, you're treating your patients with value and consideration. Now, every human being likes to know that they are important and they feel valued. Baby to the topmost adult, the oldest person in our homes or our communities. Everybody wants to know that they are important and they are valued. Now, recognizing that the patient is important and acting accordingly is how you treat the person or the patient with value and consideration. Now, respect for people's time is the number one factor. When we work so long with no explanation, with us not knowing what's going on, and the front desk, we're seeing that, I don't know whether they're called nurses, but they are chit-chatting. Me as a patient, my frustration starts boiling up. By the time I get to the consulting room, I might have come back to pour the frustration on the doctor there, who has nothing to do with it, because it actually started from the main entrance at the front desk. So every member of your staff has to understand patient care and the excellence of providing that patient care to the patient. So on time. And then you have to listen to the ideas and suggestions of your patients. Patients might not know anything clinically, but we have to be able to describe what is going on for you to be in a better position to do your various jobs. So you have to learn to listen to your patients. Every member of your staff has to listen. Listening is part of respect, actually. If you just hear someone, it's different from when you are actually listening to the person and taking into consideration what he or she is saying. And that's what your patients would like to know. So I have gone to hospitals. Unfortunately, I've been in the healthcare system a lot. Since I was a child, I've been in the healthcare system a lot, and I have a lot of healthcare stories. Listening is very important. You have to listen and probe. The more you probe, the more they tell you what is actually going on. And in that listening and probing is where you build trust in communication. So what I'm talking about is not just for doctors, I'm talking about the entire staff in the healthcare system. When you are probing and asking further questions and we are more relaxed, we tend to tell you a lot more so that you are in your position to give us better service, whether it's clinically or patient care wise. You also have to be intentional about your choice of words and your tone of voice. This particular line is very critical. I saw a man go off on one of the nurses a few weeks ago because of the choice of words. She didn't do anything wrong. It was just the choice of words, and I was sitting right there. The choice of words is very important. So you have to train your people to understand the voice tone and the choice of words. It all adds up to someone either feeling respected or disrespected. Then let's talk about compassion. Recognizing another person's suffering and wanting to help that person. So compassion is a combination of empathy and the desire to help. You understanding what I'm going through or recognizing what I'm going through and really showing the desire that you want to help. So compassion again means listening. And remember, we talked about listening when we spoke about respect. So compassion means listening. And then it also means being patient and showing kindness, even when it's inconvenience for you. because what I understand and in our hospital environments is there's a lot going on. And the staff are extremely stretched and busy. But that doesn't also mean I don't want to be listened to. We're very selfish. We know it. It's fine. But that is what patients come with. Patients are customers, pretty much. That's it. So patient care is customer care in the healthcare center. So we come expecting you to listen to us no matter what. We come expecting you to have patience for us and show kindness, even when it is very inconveniencing for you. And we are also asking that you forgive our mistakes. The mistakes that we did not do this, or we did not take this drug the right way, or we didn't follow an instruction. You have to forgive and forgive immediately. And then you being aware of what is going on with each and every individual patient. It's a lot that we are asking for. Now, how are we going to do this? How are you going to achieve excellence in patient care in your various facilities? We're going to start from within. We're going to always start everything internally. So we're going to start from within. And I'm going to ask that you know your patients. Then you become gatekeepers. And then you are going to provide onboarding and training. And we are going to put all these 4 points together. So let me see if I can break it down further. I hope everyone can still see my screen. So starting from within, what I mean by that is we begin internally. We're going to begin with your departments and your teams. Train your heads of departments, your supervisors, whoever the team leaders are, whoever manages a group of people within your chain has to be trained on excellence in patient care. Then we have to also, your teams and departments and staff have to understand that your department heads, and supervisors and leaders have to understand that your individual staff members are your internal customers as well. So I think there's a saying that monkey see, monkey do. Majority of the time, how you're going to treat your staff is going to reflect on what they are going to do to the other person. And then it's like a domino effect. So it has to start from the very top, and then it has to cascade down to the least person on your chart or within your organization. So you have to understand that your staff are your internal customers. And different departments are customers to each other because we are all a chain and we are as strong or as good as the weakest link. So if any of your staff members do not know what to do when it comes to patient care, they are the ones that's going to cause the problem and then going to show a certain reflection of your organization to the public. And you're going to wonder, no, but we've done A, B, C, D, E. But what you don't know is maybe the cleaner did something else and we have held on to it. Human beings hold on to negative longer than they hold on to positive things. So please keep that in mind. Now you have to include patient experience in your staff performance management process. I would like to repeat this. You have to include patient experience or patient care in your staff performance management process. If you do not have performance management process for your staff, you have to start that now. You need to be measuring their performance. Now, after that, you also have to provide continuous training in patient care or patient experience. And for the private firms or even the government ones, try to link profitability of your business to your patient experience. Like I said earlier, your patients are your customers. As much as we don't want them repeatedly coming to the hospital because this is health and you want them to be healthy and move out of the system, you still want repetitive customers. which means you want them to refer somebody else or speak so well of you that no matter what it is, they'll come back to you, because your hospitals and clinics are businesses, right? So we have to keep that in mind. We have to put it in our performance. We have to provide our people with continuous training, and we have to link it to the profitability of the business. Now, the second point I mentioned said you have to know your patients. Know your patients. The banks and other institutions will say KYC, know your customers. In our case here, know your patients. You have to know the demographics, age, gender, income level, educational level, marital status, all those fun stuff, religious beliefs, culture, ethnicity. You need to know for the location of your hospital, you need to know the demographics. And all your staff need to know the demographics, because once you know the demographics, you know how it influences how your people that are visiting your establishment, how they think, how they behave, how they will communicate, how they make decisions, and how they respond to services and the service that you are going to provide to them. And the same demographics is what shapes preferences, attitudes, communication styles, how they seek healthcare. So healthcare seeking behavior, are they coming at the large state? Are they noticing something and running into you? All that is a demographical statistics, and you have to know it, how they make decisions, how they understand the information you provide to them, how they take instructions and follow the instructions. Are they able to afford the affordability of services, and that links into the service choices that they will select. So you have to know the people you are serving, the communities that your facilities are located in. The second thing in knowing your patients is first impressions. First impression is, I mentioned it earlier, the first face that they are going to meet when they enter your facility. That person, that staff of yours, is the one going to set the tone for how the day is going to go for that patient. Are they going to be welcoming? Are they warm, courteous? Do they make the patient feel noticed? Or are they showing genuine care at that particular instant to that patient that just showed up? Is there a greeting? Is there a smile? Is there an urgency to help whoever this patient is? So you have to start creating a welcoming environment right at your doorstep. That improves the trust of the patient, and it makes them feel comfortable and gives an overall satisfaction to that patient. Now, you also have to understand, still on KYP, you also have to understand your patient's journey. Did they have an appointment? Did they walk in? Is it an emergency? Registration, how long did they stay there? The diagnosis, the treatment. You have to understand their entire journey. If they've been there before and they are coming back for something else, the emotion is flowing from the very first time they walked in. It takes a long time for people to forgive a bad experience. So you have to understand how the initial patient's journey was, so that you can better maybe realign or give them the best in patient care. Now, once you know your patients, once all your staff are well vexed with their environment and the kind or type of patients that they receive, you also have to make sure you are gatekeepers. And when I say gatekeeper, what I mean is, during your recruitment for new staff that have just maybe graduated from school, nursing school, medical school, wherever you find them from, you have to be intentional about the behavior traits that you are bringing into your organization or your facility or your healthcare. There are certain traits that when we say excellence in patient care, you can train to a point, but there are certain traits in human beings that are innate. It's already in there. They are sometimes born with it, or the environment that they grew up in has structured them a certain way. So you have to start looking intentionally for certain people that have certain traits. So you are looking for empathy when you are interviewing. You are looking for someone that has compassion. So you have to tailor your soft skill questions to find these things in the people that you are bringing in. Because when it comes to the clinical part of it, you can train that easily. But empathy and compassion, you cannot train. It's very difficult to train. Somebody who is detailed, you will find it very difficult to train. Either they are or they can build on it, but it will take a while. So it's better for you to find the people that already have these traits: empathy, compassion, detailed people, those that are consistent, because they are going to be doing what we are talking about, this providing the excellence in patient care to every single patient every day for the rest of how many years of their life, or whilst they are in your facility working for you. So you have to be able to identify people that are going to be consistently able to do these things, people that take pride in the quality of their work, and then people that are clear communicators. They are concise, so that when they are telling a patient an information, it is very clear, and they are able to align to the patient's communication style. And then you are looking for people that can follow up. So they've shown all these things to the patient, and maybe when the patient is going, oh, how is it going? Or maybe when the patient comes back because it's a review or something, they are able to remember the patient and say, oh, how did you go last time? Have you seen this doctor? Is this okay? It helps a lot, and it makes the patient very comfortable. Still under gatekeepers, when you are assigning roles within your department, you have to pay attention to everything that I mentioned right now. And then the same thing when you are putting together the job descriptions for the various roles. It has to have all this. It doesn't matter if the person is an IT person. They are in a healthcare facility. That is where they provide their IT. They will come in contact with a patient. Even if it is just walking down the corridor, they might just bump into a patient who might ask a question, and that tone of voice, that attitude might come and haunt us later as healthcare providers. So every single person in your chain has to understand all this. So whilst you are bringing them in through recruitment, you have to pay attention to these things. Whilst you are assigning their roles to them, you have to pay attention to it. And whilst you are even initially designing the job description, you need to be able to add that to it, so that as they are coming in, they already know that the excellence is an expectation. Excellence in patient care is an expectation for them. We are expecting it from them from the very get-go. Now, the fourth point is onboarding and training. Onboarding of your new staff sets the foundation for the performance of your staff, and it will bleed into the patient's experience or the patient's care. So you have to set expectations during the first day whilst you are onboarding them, whether it's the first day or if you have a whole structure for onboarding that goes on. Some people's onboarding can go on even through the first 90 days probation period, and you can design something like that. Now, your new staff must understand what to do when it comes to excellence in patient care, what to do, when to do it, why they are doing whatever it is that they are doing, and how to do it. It's very critical. On the very first day or the very few weeks going, you have to set these expectations. If you miss it at the beginning, it's very difficult to go back and fix it. They need to know that it is expected of them on what they must do, when they must do it, why they are doing it, and how you expect them to do it. And then once you are done with that, when it comes to the proper onboarding, we need to understand that it builds your organizational culture, your values, your missions, your expectations. It builds it. Then it enhances your teamwork and coordination. When everybody on the team knows what to do, when to do, why, and how to do it, the team is very well coordinated. And in that coordination, it improves your patient's experience or your patient's care. And that same coordination will accelerate confidence and competence. When all your people or majority of your people know what, when, why, and how to do things, your patients have trust in you and they have confidence in you. And you really need that trust calms the patients down. It removes the doubts so that when you tell them, I need you to do A, B, C, they are able to actually listen and do the A, B, C without any doubt. But when one person in the chain breaks that chain and puts any doubt in there, the patient starts questioning everything. I'll give you, and this can be the smallest of things. I'll give you an example. Something as small as a name. I took my nephew to the hospital when he was way younger. His name is Johnny. And the nurse was calling him Johoni. I still can't process how Johnny changed to a whole different name. That was the last day I visited that hospital. And I know it sounds harsh, but then I'm afraid if she can't read that name, how is she reading a doctor's handwriting and giving me my treatment and my drugs appropriately, right? And I know a lot of patients think about that. So you have to have a solid team of people that understand how critical these little minute things are to your patients, because this is life and death for us. At least that's what we think. Even if it's a slight headache, we think we are dying. And so everything becomes very critical to us. Now, when your team is well coordinated, it reduces medical errors and it improves operational efficiency, because you want your people to be very efficient in everything that they do. And this is for every member of your staff. Now, when we put all 4 areas that we've talked about together, this is what we're looking at. You're looking for a team that clearly communicates. They communicate clearly and respectfully. And I think we've already gone through what respect is. They listen to the patient's concerns, not just hear the patient, give the patient the full attention and listen to the patient's concern. They show empathy and compassion in the patient's experience or the patient's care. Empathy and compassion is very critical. And you're making sure your people take pride in the quality of work that they are providing to your patients or your customers. And then you are ensuring that they are consistent in doing all this. So consistent as in smooth and reliable service from when we walk in there, no matter how we came in, all the way to when we walk out or when we are discharged from your facility. And then you are adding your ethics and your compliance and your clinical side to all these things, being professional at the same time, doing the right thing and doing it consistently, being very competent and respectful and showing integrity and compassion. All these things are mixed together. So this is a lot of weight we are putting on you and your team, because we are talking about life and death as far as we are concerned. And then also making sure that you are protecting the patient's privacy and dignity. I have had some conversations sitting in OPD that it will make you cringe to hear that staff are talking about another patient. Luckily, you don't know who it is, but then you are wondering if they are going to be doing the same thing about you. So the trust there becomes a problem. So your people have to understand that safeguarding people's information, respecting their boundaries, and making the patients always feel valued and comfortable. So in summary, ladies and gentlemen, when we say excellence in patient care, again, we are saying it goes above clinical care. We are saying again that every member of your staff has to always consistently deliver quality service that is centered around each patient every day, every time they meet them in and out of your facility. So they are doing this through clear communication, through empathy and compassion, through consistency, through taking pride in the quality of their work, and then the skills and professionalism to add to it. Now, when you achieve excellence in patient care, you are going to eliminate the fear of hospitals, doctors, and nurses. Ghanaians have a lot of fear for hospitals, doctors, and nurses. And then you are going to build trust between your patients and your staff. And then it turns your facilities, your healthcare facilities, into a calm and healing space that doesn't give us the cringe to come. That doesn't make us fear coming to you at the very beginning before everything falls apart when we start rushing in to you. Thank you very much. Please, if anyone has questions, I can take questions.
Yes, Adele, we'll hold on to the questions. We want to take all the questions as a go. But whilst doing that, participants are encouraged to type in the questions on the Q&A box and to be addressed at the appropriate time. And someone said, patients may forget what you said, but will never forget how you made them feel. So it has been a guiding principle in my own practice.
Thank you very
so
much.
Thank you very much. Thank you very much. We want to take this next presentation by Mr. Albert Kweku Etua, who is an accounting and finance professional with extensive experience in internal and external audits, as well as tax management. He is a fellow of the Association of Chartered Certified Accountants, a member of the Institute of Chartered Accountants Ghana, and a member of the Chartered Institute of Taxation Ghana. Currently, he serves as a deputy audit manager at SNIT, where he leads audit engagements, oversees risk-based reviews, and provides strategic advisory support to senior management. He's also a partner at Firstline Professional Services, which is an accounting consulting firm. Albert has a very strong track record in financial reporting, in internal control systems, and tax compliance. He has led several high-impact audit assignments, resulting in significant financial recoveries and improvements in operational efficiencies. He is passionate about simplifying accounting concepts. I'm sure we are delighted to hear that. And helping non-financial professionals like ourselves understand and apply financial principles in their work. He holds a Master of Science in Industrial Finance and Investment from KNUST. Ladies and gentlemen, for our second presentation, basic accounting for doctors and dentists, we have Mr. Albert Kweku Etua. Sir, you can share your slides, and I'm sure that part about simplifying accounting concepts is making a lot of people happy. Someone actually sent a message that he won't join this because he's afraid of the accounting aspects. Okay, so let's try and also increase our volumes so that we are audible. All right. So Albert, please go ahead.
Thank you, Doc. I'll try and share my screen pretty soon.
Sure, sir.
Can you see my screen, please?
Not yet, sir.
Say again.
Not yet.
Not yet. Okay. A minute, please. Please give me a minute. Listen, I'm having a challenge here. Let's resolve it quickly. Is it visible now, please?
No, sir.
Hello?
No, sir, it's not.
It's not. Well,
Yes, sir. Okay. Oh. I think for a brief while you could share. And okay. All right.
is it visible now?
Yes, it is. So screen share. I mean slideshow. You can see it now.
Okay.
Yes.
Are we on now?
Yes, we are good.
Okay. Thank you so much, Doc, for the introduction. I'm happy to be with you here for this CPD session. When I was called upon to put this session together, I said to myself that it's a good thing that doctors want to learn about accounting, especially for those of us who run businesses, and even for those of us who have interest in understanding financial statements. So I hope this session will be very impactful. At least we try and break down a few of the concepts for you to be able to understand. So thank you once again for this opportunity. Can you all hear me, please?
Yes, sir.
Hello?
Yes, we can hear you, sir.
Okay, sure. Thank you. Thank you. So let us briefly walk through what we intend to achieve today. So first of all, at the end of this session, it is my objective for us to be able to, first of all, explain the core purpose and value of financial statements. Secondly, identify and interpret the key components of financial statements. And here there are 5 of them. We'll spend a little more time to break down each of the 5 components so that we can be able to appreciate them better. Thirdly, explain how to apply financial knowledge to make better practice management decisions. And then also try and recognize the connection between financial statements and your daily clinical operations. That is for those who run hospitals and clinics. And then finally, develop the confidence to read and analyze your practice's own financial health. So, before we begin, I would like us to think of our financial statements as your practice health report. I know as doctors, you are trained to read a patient's blood pressure, read the temperature of the patient, and even the body mass index of patients to be able to assess whether the patient is doing very well or not. So I'd like us to apply the same analogy to financial statements so that anytime you have a set of financial statements, by looking at certain key components, you can be able to tell whether a business is doing well or not. So let's consider financial statements as structured reports that reveal your businesses or set up financial health and position. And for me, this financial statements answer 3 critical questions. First of all, is my business profitable? Secondly, is it sustainable? And then thirdly, what is my actual financial position? And normally these financial statements are used by stakeholders, and by stakeholders I mean the owners of the business themselves, investors, regulators, lenders, assessors. And if you can recollect, anytime a business is going in for a loan, for example, the bank or the institution will ask you to bring your financial statements. All that they are trying to assess is to be able to tell whether, as a business, you can be able to pay those loans based on your financial strength. Lastly, I would want us to create an analogy between a patient's vitals and the financial statements. So, for example, we can say the heartbeat of a patient can be akin to, let's say, the cash flow statement. The temperature of your business can be likened to, let's say, the profitability of the business, and the body mass index can also be likened to, let's say, the balance sheet of your business. Okay, so the picture we have here looks at the complete financial statement picture. And let me say here that anytime you are reviewing financial statements, you don't review the documents in isolation. Each of the components are connected. So in reviewing financial statements, you need to look at the complete picture. And the diagram we have here tries to depict these components. These are what we refer to as the components of financial statements. And there are 5 of them. We'll spend a little more time here and then try and break each of these components down for you to be able to understand. The first one is the income statement, which shows the performance of a business over a period in time. And normally, this can be quarterly, this can be monthly, or mostly for a period of 1 year. The next component is the balance sheet, which shows what you own and owe at every point in time. It gives you a snapshot of what you own and what you owe at every point in time. The third one is the cash flow statement, which tracks the actual movement of cash in and out of the business. Fourthly, we have the statement of changes in equity, which shows how your ownership interest over a period has moved within that period. The last one, which we call the notes, provides essential context and detail behind the numbers that we see in each financial statements. Before we pick the components to break them down, I would want us to spend some time here to look at a few finance terms, which we call the language of finance. The first one is the revenue. Revenue, as we mostly know, is the total income your practice generates from providing medical services. And these mostly will come in the form of consultation fees, lab tests, drug sales, and what have you. This is mostly what a business will consider to be the sales. But in other words, we just call it revenue. Hello, can you all hear me? Hello?
That's what they have there.
Yes, sir, we can hear you.
Adams.
Please go ahead.
Okay.
Honorable. Evening, afternoon, what's up? What the problem was, sorry, to
The next one, we consider the expenses. And these are the costs that we incur to be able to manage our hospitals. So, for example, this mostly will be in the form of staff salaries, rent, medical supplies, and any form of cost that we pay out to be able to run our hospitals. The next one is profit. And mostly this is what remains after deducting all your expenses from your revenue. So for example, you made a revenue of, let's say, about 100,000 cedis, and then you spent about 80,000 cedis on salaries, on your rent, or whatever. Whatever is left here is your profit, which is about 20,000. But then again, there are various forms of profit, which when we get there, we'll try and break them down for you to know the various components. The next one, our next term is what we call assets. And these are what we could refer to as resources your practice owns that will provide future economic benefits. Here, the key word is providing future economic benefits. So any resource that you own that does not guarantee you future economic benefits cannot be termed as an asset. Mostly, this will be in the form of your medical equipment, your buildings, your vehicles, your drug inventory, whatever cash balances that you have. These are all termed assets. And again, there are various components or different types of assets. Some are liquid, some are not so liquid. When we get there, we'll break them down for you to see. The next thing is what we normally refer to as liabilities. And these are obligations your practice owes to others. So for example, the business owes staff salaries. The business owes suppliers. These are all put under liabilities. The last term here is our equity. And mostly your equity represents your ownership interest after you have taken care of your liabilities and your assets. So these are a few terms that will be coming across as we move along. So I want us to take note of them. We'll be using them as we move along. Okay, so let's pick the first component, which we refer to as the income statement. So as I indicated earlier, the income statement, which we normally call profit and loss, shows your business performance over a period of time. And mostly these can be grouped into monthly statements, quarterly statements, or annually. It depends on how the business wants to express these financial figures for whoever is asking them. And this measures whether your practice made a profit or suffered a loss during that period in time. When you look at the figure on your right, it gives us a structure of how a typical income statement looks like. So for example, when you consider your revenue, as I indicated, it gives you an idea of whatever monies came in. And then also when we take out our expenses to arrive at our profit, it gives you a picture of how the business is performing. And again, as I indicated, there are various components within this, between revenue and the profit and loss. As we go on, we'll take them, we'll have a look at them and then try and explain, break them down for you to be able to understand. Now, when we talk about income, these are various activities that happens in the hospital that brings in income to the facility. So for example, you take in consultation fees, that's income from patient visits and consultations. Pharmaceutical sales, when we sell drugs to patients, it's a form of revenue that comes to the business or the hospital. Reimbursements from NHIS service and private insurance, surgical procedures, revenue from lab services, income from procedures, and other services that brings in revenue. Mostly for a typical hospital, revenue from consultations would most likely form a bigger form of your income, but it depends on the kind of service that the hospital is rendering. So this basically gives us an idea of how income comes into the various hospitals. When we look at our cost, for a typical hospital, we expect a majority of our costs to come from personnel costs, and mostly being from salaries, other benefits that we pay to staff, Rent is also a cost that the hospital incurs. Payment of medical supplies, equipment, administrative costs such as office supplies, software payments, professional fees and licenses, and any form of adverts that the hospital might want to undertake in. For a typical hospital setup, personnel cost may be one of the largest cost category that the hospital may incur. So your ability to be able to manage this cost would help improve the efficiency of the hospital. I mentioned earlier that there are various kinds of profits when it comes to a business structure. So for example, I'm sure you may have heard of gross profits. Now, gross profit simply shows or simply tries to measure the efficiency of your core medical operations. So for example, when you take out your revenue, any cost that it can be directly attributable to a hospital setup. So for example, any cost in relation to medical supplies can be put under direct cost. So that when you take away all your direct costs from your revenue, you have gross profit. And this shows how efficient your core operations have been. From gross profit, we move to what we call operating profit. And this mostly will show profitability from your normal business operations. And the cost components that we will normally look out here are mostly in the form of salaries, rent, utilities. So when you take out these components from your gross profit, you arrive at what we call the operating profit. From operating profit, mostly we'll then look at taxes and interest. And this typically will give you what we call your net profit. The diagram here, which I call the profit waterfall analysis, shows the various components of profit from the revenue till you get to your net profit. So net profit basically refers to all your revenue minus all expenses that you incur to run your hospital. Our next component that we'll look at is what we call the financial position snapshot or the balance sheet. I'm sure as medical professionals, you may have one point in time come across what we call the balance sheet. And the balance sheet captures your practice's financial position at every point in time. Mostly the balance sheet will tell you or give you an idea as a business owner what you own, what you owe, and what is the net worth of your business. And mostly the structure of the balance sheet is as follows. You have your assets, your liabilities, and your equity. And you can see that there's a scale here, which simply means that at every point in time, when you put all these components together, it has to agree. And that is what we call, or that is what mostly business people will refer to as the balance sheet is agreed. It means that at every point in time, whatever assets that you own as a business, these assets are either financed through loans, which we refer to as liabilities, or equity. Equity simply means that your stake in the business. So either you are financing that asset you have acquired through your own investments, or you are financing those activities through liabilities such as bank loans. At every point in time, when you put these three components together, all this must agree, and that is what we refer to as the accounting equation. And it is a foundation of accounting. At every point in time, whatever assets that you own should be equivalent to your liabilities and your ownership interest as the owner. That's what we call equity. Now let's look at what assets are. As I indicated earlier, assets are the economic resources your business controls that are expected to generate future economic benefits. They fall into three broad categories. So we have current assets here, fixed assets, and other forms of assets. When we say an asset is current, what it simply means is that they are highly liquid, meaning those assets can easily be converted to cash. Mostly, we have cash in bank, which is a form of current asset. Patient receivables. These are mostly amounts that we expect to receive from a patient after we have given out a service to that patient. And mostly these current assets are supposed to be, these patient receivables are supposed to be recovered within a period of 12 months for it to be qualified as a current asset. Fixed assets are your long-term value drivers. So for example, medical equipment, your furniture and your fittings, your IT systems, your buildings, your vehicles, these are all classified as fixed assets. We have other forms of assets such as operating licenses, the goodwill of the hospital, and then what we call intellectual property. These all forms part of assets. And normally when you pick a typical financial statement, the assets are all grouped together. So you see a section where we call current assets, you see a section called fixed assets, and you see a section called other assets, which mostly will be the form of intellectual property or goodwill. Another aspect of the financial statement is what we call your financial obligations, which we call liabilities. Typically, your liabilities will represent your present financial obligations which arise from past events. So for example, money your practice owes to others. And again, these liabilities are grouped into two. So we have what we call current liabilities, which are normally expected to be recovered within 12 months. So mostly we have payment to your suppliers. If you bought those supplies on credit, payment to your staff, any salaries that has not been paid, any tax that you are yet to pay, any short-term loans and overdrafts that you are yet to settle. If these are expected to be settled within 12 months, they are referred to as current liabilities. Then we have what we call long-term liabilities. And mostly these are expected to be settled after 12 months. So mostly this will be in the form of bank loans, mortgages, and other equipment. One key thing we need to note is that too much liabilities on your books constrain your financial flexibility. So for example, every cedi that you spend on debt servicing, loan repayments, and interest is a cedi that cannot be used for operating costs. So it means that if you have too much liability in your books, it restricts you from having funds available to be able to cater for other equally important aspects of a business. So the lower your liabilities, the better for you as a business. The next component I want us to look at is equity. So when we talk about equity, it simply represents your ownership claim on the business after all your liabilities have been settled. As we say, it is the truest measure of your net worth as a business owner. So equity is built, first of all, from your initial capital invested, then from any accumulated profits that you have over the years, minus any drawings that you may have taken out as a business owner. Sometimes as business owners, we take out some of the funds that we've accumulated so far. Any amount of money that you take from the business goes a long way to affect your equity. What it means is that a high equity position means a strong ownership position and financial stability. Low equity indicates a weak financial position, often over-leveraged. So it means that if as a business, your stake in a business is higher, meaning that whatever you have in a business is higher than whatever outsiders have, that's liabilities. It shows a good financial position, so that when equity grows, When equity grows, you retain profits. And when it shrinks, meaning that you withdraw more than you have, it reduces your stake in the business. As I indicated, the accounting equation formula can be juggled whichever way you want it. But the important thing is that at every point in time, your equity will always equal your liabilities, your assets minus your liabilities. That means what you own minus what you owe others will be equal to your net worth. Okay, so let's look at how equity changes for a business. So for a typical business, once you retain majority of the profit you have, it means that you are growing your equity. Whenever you have new investments in the business, it means that your equity is also growing. But the downside is that anytime as an owner, you make drawings from your business, you are reducing your equity. Anytime the business also makes losses, it means that you're also reducing your equity. So in a snapshot, the equity acts as a bridge between your income statement and your balance sheet. It details exactly why your practice network changed from the beginning of the period to the end. So in order to be able to determine your equity at every point in time, you need to consider whatever equity you had from the start of the period. So it means that whatever net worth you have at the beginning of the period, if you add any profit that you make for the period, and then take out any drawings over the period, that should give you your closing equity. And that is your net worth at the end of every point in time. As I indicated earlier, the foundation of all accounting is what we refer to as the accounting equation. And at every point in time, the equation must agree. So all your assets should be equal to your liabilities plus equity at every point in time. And this is the absolute foundation of all financial accounting. As I indicated, it must always balance without exception. This is because of the principle of double entry. So in accounting, we call something double entry. And whatever accounting transaction that we pass, it affects two sides of the equation. At the same time, always keeping the equation in balance. So that if at every point in time, your accounts do not balance at the end of the period, then it should tell you there's something wrong, which has to be corrected. So let me give you a typical example here. So if you buy an asset for 100,000 Ghana cedis, and you finance that asset purely through a bank loan, it means that at every point in time, when you draw up your accounting equation or the balance sheet, your assets, which is the equivalent that you have brought in, would always be equivalent to the 100,000 cedis liabilities, which is in the form of loan. But assuming you finance the same equipment partly through equity and partly through a loan. For example, you took a loan of 50,000 cedis to finance this asset. It means that you are also financing that same asset by 50,000. So that at every point in time, when you draw up your balance sheet, your assets of 100,000 will be equivalent to your liability of 50,000 and equity of 50,000, which will always meet the accounting equation balance. That is what we refer to as the balance sheet has agreed. Now let's move to cash flow, which is the fourth component of your financial statements. And I'll say this is perhaps the most critical concept in this entire session. So I would want us to pay a little more attention here. One thing I always want us to know is that profit is not the same as cash. And this is what I mean. A business can be making profit, but then we'll be having a challenge with cash. A typical example is For example, a patient walks into your hospital and the consultation fees, let's say, cost about 100 Ghana cedis. Even though you have recorded 100 Ghana cedis as part of your revenue, if the patient fails to make payment for this 100 cedis and you put this into receivables, it means that even though you have a revenue of 100 cedis, you don't have that cash available to service your obligations. So, for example, when it comes to payment of salaries, you may not be able to have the cash available to make that payment. And this is what we refer to as the receivables trap. When you bill a patient, it counts as revenue. That's increasing your profits. But until they actually pay you, you have no cash to pay for your staff or rent. So the cash flow statement will mostly track the actual cash moving in and coming out of your practice or your business, showing exactly where cash came from and where it went. So as I indicated earlier, we have a profit of 100,000 cedis. At the same time, you have customers owing you 200,000 cedis. Even though you have made a profit, it means that you don't have the cash to be able to service your receivables when they become due. And this is a red flag that I want us to note, that at every point in time, cash is not always equivalent to profit, which is a very important concept I want us to take note of. Mostly, the cash flow statement has three components, and this mostly will be the cash that comes in and cash that goes out as a result of our normal operations, which we call cash flow from operations. And this represents the cash generated or consumed by your business primary medical activities. It is the purest measure of your practice day-to-day financial health. So typically, your cash flow from operations will either come from payments from patients, payments from health insurance, that's reimbursement from health insurance, and other corporate clients that you have. And cash mostly goes out through payment of salaries, payment for drugs and medical supplies, payment for rent, utilities and facility payments. Cash flow also comes in the form of investing activities. So for example, when we purchase a medical equipment, it's a major cash outflow that doesn't automatically hit the income statement as an expense, but heavily impacts your reserves. At the same time, this equipment that we purchase is expected to bring in future returns. Mostly, this is what generates revenue for the business. So the medical equipment that we purchase, even though the initial stage, it will result in some cash going out. At the end of the day, it is going to help the business to recoup part of the investment that has been made in the form of it is going to help us to recoup part of the business that we have made. So mostly the cash inflows will mostly come in the form of maybe when we sell off a part of our medical equipment, or when a part of a long-term investment that we have made matures, or when we sell part of equipment that the hospital owns. Cash outflows will be in the form of when we purchase a new medical equipment, when we buy medical property, when we upgrade our systems. These are all ways that will impact our cash flow. So at the end of the day, we always say that a positive cash flow is always good for the business, because as I indicated earlier, cash is what we use to run the business. The last component of the cash flow statement is what we refer to as cash flow from financing activities. And mostly, these are funds that we receive from banks to expand the clinic or buy equipment, or any form of investments not coming from owners. On the cash outflow side, this will mostly be in the form of payments of loans or interest, and any form of drawings that the owner takes from the business. This, at the end of the day, all has an impact on our cash flow statements. The notes to the accounts are the final component of a complete set of financial statements. And mostly, or sadly enough, this aspect is mostly overlooked. But it plays a very important role in the group of financial statements. The notes to the financial statement provide a summary or gives context to the figures that we have in the document. The summary numbers in the main statement provide important signals, but the notes provide the essential context and detail required to truly understand those numbers. So to borrow a clinical analogy, a balance sheet without notes is like making a diagnosis without reviewing the patient's full medical history. The numbers alone don't tell the story. It only gives you a part of the story. So mostly the notes will be in the form of accounting policies, which explain the rules that are used to prepare the financial statements. So for example, it tells you how the depreciation that you have in the figures is calculated for you to be able to understand the basis of that calculation. It also gives you an idea of any potential liabilities that may cost the business in the future. It also gives you an idea of any form of related party transactions. These are mostly dealings with related parties. For example, the business has a subsidiary, so that it gives you an idea how these transactions between the business and the subsidiary are treated. So it's always important when you are reviewing financial statements to also look at the notes to give you proper context to the figures that you have. So in summary, the four main financial statements that I've talked about are linked, so that an entry in one of them directly impacts the other. So here is how the flow works. The income statement, as I indicated, measures profitability over a period of time, which results in your net profit. The net profit then flows directly into your statement of changes in equity. And I said that the changes in equity tracks the changes in the owner's value. The ending equity then flows into the balance sheet, ensuring that the balance sheet balances. So simultaneously, the ending cash balance from the cash flow statement also reconciles directly to the cash line on the balance sheet. If one statement is inaccurate, the entire system will fail to balance. And this is why I indicated that it is always good that when you're reviewing the financial statements, you look at the holistic picture, because looking at one side without linking it to the other may not give you the complete picture, which may be misleading to your practice. So to end, I'll say that financial statements are not merely documents that we just look at. They are documents that can help us to make some very good management decisions. So for example, when it comes to pricing, you can use your income statement to calculate your true cost and allocate cost per head. It can also help you to review your fees annually against rising costs. So for example, for managing costs, we track our expense trends month by month. When you spot a cost category that is growing faster than the revenue, it gives you an indication that it's something that you need to look at. Also, anytime as a business you want to embark on any expansion planning, you need to review the balance sheet and cash flow statement before, for example, you buy in equipment, or maybe you want to expand to other branches, to be able to ensure that you have enough resources or funds available to cater for this expansion. And lastly, the numbers also gives you an idea of which of your receivables that you need to track. because as I indicated, you can be having a higher profit margin, but then your cash flow statement or your cash flows may be weak, which will, at the end of the day, affect your ability to be able to manage your practice. I want us to look at a few pitfalls that will undermine your business, or that will prevent you from achieving your objectives as a business. So, for example, the first one is mixing personal finance and your business finances. It's a common practice that most business owners, instead of separating their personal finances, often mix this with that of the business. So, for example, in making payments for fees and other things, they tend to do so from the business. And this is a very serious red flag that if you don't curtail, it can affect the business from achieving its objectives. The second is ignoring cash flows in favor of profit. So when you focus too much on your income statement and assume that a profitable practice is what is important, that is going to affect the ability to be able to meet your obligations when they fall due. And lastly, when you take on too much debt, so taking on excessive debt to purchase equipment or expand too rapidly. In finance, we say the business is overly geared. When there's too much finance, so that the business struggles to pays off these loans, it indirectly tends to affect the business. So in conclusion, one thing I want us to take away is that as a business, profitability does not guarantee survival. Meticulous management of operating cash flow and patient receivables is the lifeblood of your practice. It is also important for you to protect your equity, so that by growing it, you retain profits and make smart investments. Protecting the business by avoiding excessive debt and unsustainable personal withdrawings. And as a business, before you make any decision, you need to move beyond intuition. Use financial data to set consultation fees, negotiate with suppliers, plan expansions, and identify cost-saving opportunities. Thank you so much. Hello?
Yes, sir. Thank you very, very much for this insight. I'm sure my colleagues are now feeling, okay, now we understand a bit of the terms. So we'll allow you to just take a breather, and we'll just move straight into the question. Kindly, anyone who has a question or comment, please use the Q&A box and please type in your questions. So I think this first question goes to Adele. Dr. Ernest Elike-Mensah says, great presentation. Really enjoyed listening. Given the high doctor to patient ratio, instances where doctors work 12-hour shifts with no breaks, what will please be your take on achieving all the above parameters to ensure excellence in the midst of all the demands on an already burnt out doctor? Thank you.
Doctor, that's a great question. And yes, doctors are burnt out. Coming from me personally, I would say we need more of you to rotate the schedules so that our doctors are not working 12-hour shifts. So in a world, I mean, right now we are not in a perfect world, but if we can possibly, or if your facilities can have other doctors that can be trained that you don't have to do, or each doctor doesn't have to work straight 12-hour shift would actually solve or reduce that burden on you. So maybe additional staff within your facility will help. Thank you.
Thank you very much, Adele. And the following questions come to, okay, let me just do one for Albert, then I'll come back to you, Adele. So Anthony Erikeshen is asking that from what you said about the receivable trap, can we therefore conclude that the cash principle of accounting is better than the accrual principle since it accounts for cash only when it is received? And let me add a second one as well. If a long-term loan is a non-current liability, what about the part that is serviced within 12 months? Can a long-term loan therefore be listed as both a current and non-current liability? Now we have an accounting class, right? So Albert.
Okay, so let me take the first one. Which was asking about the cash
principle being better than the accrual principle.
No, so we have accounting standards that guide the preparation of these financial statements. And for us as a country, we've adopted the accrual form of accounting. You see, the accrual form of accounting is always better because, first of all, it allows you to anticipate whatever has come in. So that for a medical practice, even though the patient is yet to make payments, you record it as part of your revenue. But the caution here is that you need to indicate that it's a payable so that you don't overstate whatever revenue has come in. So even though the money is yet to be received, you are accounting for it on the other side by indicating that it's a receivable. Sorry, it's a receivable. So the accrual form of accounting is always preferred to the cash form of accounting. Hello, Doc.
Yes, sir. And the second question is asking about the long-term loan being a non-current liability. And he's making the statements that can a long-term loan be listed both as a current and non-current liability, since there's a part of a long-term loan that is being serviced within 12 months?
No, so it depends on the kind of loan that you're talking about. But typically, once the loan goes beyond 12 months, it is considered as a long-term loan. What you are going to record in your income statement is a kind of the interest that you'll be servicing every month. And that is accounted for as part of the income statement. But when it comes to the balance sheet, it is always, once it goes beyond 12 months, it is supposed to be recorded as part of your long-term loans. I hope I'm clear.
Thank you, sir. Thank you, sir. And Dr. Emmanuel Kumsin is asking, this one is to Adele, how do you manage illegal collection of monies from clients or extortion?
Dr. Kumsin, thank you. That's a good question. Illegal collection of money. For other businesses, what we've advised them to do is minimize cash as much as possible, so that all payments are more digitalized. So they are using cards, they are using Momo payments forms. So minimize cash use as much as you possibly can. And then the patient knows that they are directly paying to the hospital or the clinic as opposed to some other person. I hope that helps. Thank you.
Thank you. Then we take two questions from Dr. Victor Zumelo Pencil. The first one is talking about in calculating our profits for the month. We have to include on the income side services rendered on credit basis, which are yet to be paid, or do we wait and capture them when they are redeemed? Then the second question, I think because it's a lot, let's take it one at a time.
Okay, so as I indicated earlier, the accrual concept of accounting will typically want you to recognize the revenue when it comes in, even though it's not been received. So, for example, a patient comes in for a medical service, and then instead of paying cash, the patient defers to make payment later. Even though you are recording that as part of your income, on the other hand, you are also indicating that that payment is yet to be received, which is a receivable, and that normally will go into your balance sheet. But when it comes to the revenue side, that component is recorded as revenue.
Okay, and the second question is saying that our corporate tax is calculated on the net profit. If most of my net profit is comprised of monies from services delivered, which are yet to be paid, will the tax collector wait for those claims to be settled before coming for the tax? Even more disturbing is the fact that there is no guarantee that these monies will be paid wholly or partly.
Okay, so let me take the second bit of the question. For monies that we cannot reliably take as revenue, we would normally not have recorded those. So we would normally have not have recorded those as part of our revenue. But the ones that, based on the company policy, we are sure. So, for example, these can be amortized, let's say, receivables within 12 months. So once we are sure that those receivables are coming in, they are part of our revenue, which will be recorded. And so those are supposed to be calculated as part of our revenue when the tax person is accounting for whatever tax or whatever services you have recorded over the period. I don't know whether I've answered the question.
Okay. Yeah, I'm sure if there's a follow-up to Dr. Victor Uzomelo Pencil will just put it up. To Abdel, says that finding the right staff with strong character can be quite challenging. It highlights the need for continuous improvement in training within nursing schools and universities, particularly around professionalism, communication, and patient-centered care. How do employers effectively manage and retain staff who choose to leave just when efforts are being made to support and improve them?
Thank you, Doctor. So yes, staff are leaving not just healthcare, but all organizations. I mean, usually the generation that we have now, if you are able to get 2 years, 3 years out of them, you've done very well. So loyalty for them is an issue. However, we have to start, or you have to start as a business, looking more at talent acquisition versus recruitment. Now, the difference in those two is recruitment is, I need somebody now, and so I quickly have to go and advertise and start looking for the person, said in one sentence. But when you are doing talent acquisition, you have a whole structure that is drawn out of a strategy. So I think you mentioned about the nursing schools. So you are partnering with the schools or where your sources of intake for the new staff that you are bringing in, and begin to identify the traits from that very school. The teachers or the lecturers in that school, they know who the good ones are, who the ones that have the good characters, as much as the skills. So they are able to help you identify them. I've had organizations that have their talent acquisition structure where they've partnered with schools, specific schools, because they've identified certain schools that are good for their industry. So they go to the schools and partner with them. The lecturers are able to identify some of the top students that they pick, looking at their character, even as young people at school, and their grades as well. So they identify them, they start providing internship for them. Because usually when they come out of school, it's a bit difficult for them to find work. So they provide internship for them in and out of, vacations and things like that. Then when they are done, this company goes in and brings them to do national service with them. So it's automatic. They come in and do national service with them. And within that national service period, plus the previous internship period that they've had, they are building these individuals. They are tailoring them. They are shaping them to fit their organization. The young ones then build, loyalty, because once they are done with that national service and they are selected, they already have an alignment with that specific organization. So out of that loyalty, out of the fact that you picked me straight from school and you've trained me, they stay a bit longer. Now, we can't guarantee that they are going to stay, like our parents did when they stayed in a company for years, but they do better than the average of 2 to 3 years that we are currently seeing across industries. So I would say start having a talent acquisition structure or strategy. Get someone to design one, and then you can use that to slowly build your pool of people that are coming into your facility or your organization. Thank you.
Thank you. Okay, so Dr. Christina Dai is asking, please, what will you suggest is a healthy ratio or balance between liability and equity, as some people believe that being highly geared gives you a tax advantage? It's to Albert.
Okay, so it's true that you said that being highly geared gives you an advantage because the taxman will not consider you for tax purposes if whatever investments or whatever funds coming in are loans. But you see, whenever somebody or a third party has an upper hand over your business, it doesn't give you the leverage to be able to have enough funds to move funds around as and when you need to do. So typically, being highly geared means that you have a high percentage of loans as compared to your own interest in the business. And you know what that means. Whenever a third party has upper hand over your business, you are most of all likely to service the person's interest than your own. So the tax aspect that you brought in, what it simply means is that any amount of money that you take out as a business to pay loans, it reduces your profit, and the taxman sees that as allowed. But we need to find a healthy balance between how much loans you have as a business and how much you have as equity. So that if you try to find a healthy balance, let's say you do about 50-50 or 60% of equity, 60% of loans, it gives you the ability or the free hand to be able to have funds to, let's say, pay off your recurrent expense as and when it becomes due. But the opposite may not be the case. So that's the downside of it, of having too much loans in your business.
Okay, thank you. So the next is, I'll just let, okay, let me skip one and give, this one is pretty straightforward. So from Dr. Dixon Bando, hi Adele, does your firm run any programs or training for private hospitals or interested facilities to improve the quality of human resource they have employed?
Yes, thank you for that question. Hello, Dr. Bando. Yes, we do run trainings. We can customize or tailor make your trainings for you. So we do run trainings for different facilities, and we can come in and train your support staff about what we've just talked about, or we can make specific trainings for your people to help you manage them better. Thank you.
Thank you. So from Dr. Enoch Kwame, so he's asking about, to Albert, some more education on tax returns, and it's also inquiring why, since the controller and accountant general department just pays public doctors in public sector, why can't they process the doctors' annual tax returns and forward it to the GRA? And also, as a private practitioner, how do you file tax returns? We'll take questions.
Okay, so the bit about the tax returns, you see the tax laws we have in Ghana mandates that each individual will file their own taxes. So previously, some institutions were doing that on behalf of their staff, but the law now mandates each and every staff or each and every worker, whether you are a government worker, whether you are a private worker, to file your own taxes so they can be able to assess you based on your own circumstance. So the days where the employer or the institution could do that for you are over. Now the law requires that you as an individual, you file your own tax returns. I hope that's clear.
Yes, sir.
Yeah.
So, and it's asking about the how. How do a private practitioner file the tax returns? If you could just give some.
Oh, okay. So these days their tax returns can be done online. So there's a portal. The GRA has a portal that they've created that you can easily sign on and file your tax returns. It is pretty straightforward. Maybe we can talk behind the scenes to help you to do it. But tax returns these days have been made very easy by the GRA. There are portals where you can easily file your returns online. Yeah, so maybe after the webinar we can have a talk on that.
Okay. So thank you. And Dr. David Afudego is asking whether we need to pay withholding tax on medication bought for a hospital or clinic.
Okay,
I think it goes to Albert. Yeah.
Yes. So withholding taxes are in two forms, right? The withholding tax you pay when, okay, so for example, when you buy items from a supplier, and those items are typically more than 2,000 cedis, that supplier is expected to withhold the tax from you for onward payment to the GRA. Same way, if somebody also buys from you, and those items, for example, typically are more than 2,000 Ghana cedis, you are supposed to withhold the tax and make payment to GRA. So for hospitals, I don't know whether government hospitals or private hospitals, you can make a case for the exemption of withholding taxes. But I think recently I saw a communique from the Ministry of Finance where it said that withholding taxes have now become mandatory for all individuals. So the case where some people were given exemptions, I don't know for the case of a government hospital or private hospital setting, whether that to be allowed. But typically, when you buy medical supplies from any supplier, they are expected to withhold a percentage of that, typically about 5% from that, which they will make payments over to GRA. So yes, the law mandates that.
Okay, sir. So back to Dr. Victor Zumelu Pentel. Like saying, when we offer treatment to insurance companies, we record the bills as income. However, when they are paying, they reject some of the amounts. For example, I submit a claim of 1,000 cedis in January, but paid 600 cedis in March. Obviously, the 1,000 will go into my January income. How do I reconcile the shortfall of 400 cedis in my profits?
Yeah, so as I indicated earlier, whatever shortfall that you have as a result of not being able to recover your income goes to the receivable side of the balance sheet. So even though your revenue side has recorded 1,000 cedis as you haven't offered a service to the patient pays you, for example, about 600 cedis, and that is recorded as part of the cash. The 400 cedis that is left is also recorded as part of your receivables for the equation to agree. Remember, I mentioned the accounting equation. So the 1,000 cedis is in your revenue, 600 cedis goes as part of your cash, and the 400 cedis that you are yet to recover goes as part of your receivables. So at the end of the day, the whole amount is accounted for as part of the chain.
Okay. And from Dr. Emmanuel Kumsin, how much is tax on allowance? I'm sure someone has cornered my boss. So
it looks like your people are interested in the tax aspect. So,
yes.
So if you say how, can you come and give me the question?
It's asking how much is the allowable tax on allowances for, is it 10% or 20%?
Okay, so
sometimes as you get some allowances, maybe from a facility or wherever you are working, and you before it's handed over to you, you said, oh, they are deducting tax. So you want to find out how much is it.
Okay, so typically, a medical doctor working in a facility, for example, maybe you are paid some clothing allowance, you are paid some food allowance, you are paid. So it depends on the kind of allowance. So typically,
okay.
Let me take a clothing allowance, for example. When you are working and you are paid clothing allowance, the law says that allowance should ordinarily be added to your taxable income and then taxed.
Okay.
So depending on the kind of allowance, if it's 4, the law says that up to 650 cedis or so of that amount should be taxed. So irrespective of whatever amount you are receiving, if you are receiving about 1,000 cedis in full allowance, it is only a portion of that amount that is taxed, about 750 cedis that is taxed. If it's, let's say, maybe allowance from a hospital, maybe in the form of you do some maybe short time work with the hospital, maybe the hospital may withhold an amount of about 10% from that allowance. So it depends on your situation and your circumstance. That will determine the kind of tax that should be taken out.
Oh, okay. Okay.
I was
interested in whether they should even be taxed at all. I mean, especially for allowances being given by the hospital. We know those ones that we receive directly from government through control and account and are taxed. But those ones that are being received at the facility level, whether they should even be taxed at all. Because this is so who would take the tax? Because I'm not sure. Well, Dr. Kumis, I don't know whether I don't know whether the hospital is going to give the tax to GRA or it goes back into the IGF pool to be repurposed.
No, so typically, the law says that any form of allowance that you receive as an individual in the form of income to you, that allowance has to be taxed. But then again, we need to put that into context. As I said, it depends on the kind of allowance. So maybe, I don't know your medical terms, maybe you call it locum or I don't know, where apart from your government related hospital that you work with another form of hospital. They pay you some allowance at the end of the day. Typically, most hospitals will withhold about 10% of that. And that amount that they are withholding is supposed to be paid to GRA. It is not supposed to go back to the hospital. So once you withhold tax from an employee and you fail to remit to government, that is an offense under the tax laws.
Albert, I think my chairman has just whispered to me. We need to have because you see most of the questions are coming on tax and a lot of the questions. So we will probably have to go back, prepare, and we'll come back with another CPD on all the tax issues so that our members can be properly educated. So I mean that's a different ball game altogether. Let's take this last one from Victor, talking about stock. It says, when you take stock of your drugs, do you use the current value as you're taking the stock or the value at the time of procurement to assess your stock?
Okay, so if you quite remember, I made mention of accounting the notes to the financial statements. And in there, you have what you call the accounting policy. Every company has its accounting policy. And as part of the accounting policy, they talk about how they value maybe items. So for example, typically one of them is stock. Typically, most companies will value stock at the lower of cost and the net realizable value. What this means is that if you are valuing your stock, you need to look at how much that stock cost you and how much you can sell it. and use a lower value. Most companies decide to use that. But then again, it depends on the accounting policy of the company. Most companies have different policies, and whatever policy that you have, you need to stick with it. So from each accounting period, you need to value the stock according to that policy. So you don't say today I'm using the lower of cost, tomorrow I'm using the net realizable value. You need to be consistent. So it depends on the policy that the company decides to adopt.
Okay. Thank you very much. Yes, very, very much understood. Ladies and gentlemen, it's been a very insightful session. And one thing that had come out very, very strongly in today's discussion is that, modern medical practice, it demands more than just clinical care or clinical excellence. The modern doctor requires financial clarity, operational discipline, and an unwavering commitment to patient-centered care. We have been trained through school and postgraduate training to diagnose, treat, and heal. In order to sustain that calling, we must learn to manage, to measure, and to make informed decisions. Because for most of us, being in trust in leadership positions, a practice that's not clinically, it's not financially sound, you can't deliver the quality of care that your patients deserve. And there's also that tendency to look at the numbers. Numbers. I'm seeing a lot of people. I'm bringing in a lot of revenue, but your practice should be defined by compassion. Because behind each number that you see maybe on outpatients and even in inpatients wards or care, it's a human life, a patient who is placing their trust in your hands. So what do? The charges, you run your practice with precision, but don't lose the human touch. After all, that's what makes medicine a calling and not just a profession. I sound like Reverend Father Fiapuku. If we can really strike a balance between using sound accounting principles and excellent patient care, I think that we are building sustainable, trustworthy healthcare systems. Mr. Albert Kwekuetua, thank you very much, sir. Your presentation was on point, and I'm sure has just educated us a lot. And I'm sure we'll come back on this and the tax issues.
Thank you so much.
Adele, thank you for reminding us once more. I think sometimes we get caught up in making diagnoses, forgetting that there are human beings behind every diagnosis that we make. Sometimes you get to OPDs and the numbers, you are seeing numbers, seeing next diagnosis, and you go. But these are people who have traveled sometimes thousands of kilometers to just come and receive care, and spending a few more minutes trying to see the human being behind the diagnosis will help us make the patient-centered care that we need to. Thank you very much for spending this evening with us. And to everybody, thank you for staying on. At our peak, we had a little over 800 people joining. That's not bad for a hot Sunday afternoon, especially after eating a bowl of fufu. Yeah, you don't go as fast as you want to. And we ensure that the recording will be made available on our social platforms so that we can access, go back, read over, and also watch and learn. On behalf of the president of the Ghana Medical Association, Professor Med Ernest York, and I can see my big people on council can see the Vice President, Dr. Med Akoto-Ampao on the call, my Central Divisional Chair, Dr. Med Iman Owusu-Ofori, who gave us the opening prayer, and also see the chairman of the Northern Division, Dr. Cosmos Yakubu, also on. The chairperson of the Volta Division, Dr. Med Sefako Adinira, is also on the call. And my CPD chair and the treasurer for the Ghana Medical Association, Dr. Med Kwekua PJ, was also there. And all the members of the CPD committee, we are very happy and delighted that you spend this afternoon with us. Please be on the lookout for more of such as we go on. And also don't miss the mentorship session. The flyers will be out. We also have another very interesting one coming up soon. We tend to engage and have our members educated. Thank you. And I will ask Dr. Medsefako Adinira to give us the closing prayer.
All right, let's pray. Heavenly Father, I want to thank you for this evening. I want to thank you for this webinar we've had and for everything that we've learned. We pray asking that you help us, that we'll be able to apply it. We pray committing ourselves into your hands for the rest of the week, that you direct us, you lead us, you be with us, and help us to accomplish whatever we've destined or purpose for the week. May we have a great week and be able to attend to our patients and deliver quality healthcare. In the mighty name of Jesus Christ, I pray with thanksgiving. Amen.
Amen. Thank you very much. Thank you very much for those who joined both in country and in the diaspora. Dr. Nawache from the UK, thank you for joining in. Thank you very much, and please let's have a good evening.
Thank you. Bye.